Welcome. This is our first episode of Market Minds, and we wanted to bring on some of the innovators that we have within the Pyth Network community. It's my distinct pleasure to be joined today by longtime Pyth supporter, David Mercer. Welcome, David.
Good to be with you, Mike.
Let's just give a little bit of a background. So I've been knowledgeable about LMAX for a really long time because my background's in FX. And, the thing that always strikes me is that LMAX is really designed around innovating to solve specific problems. And I think that you came on the scene, and I remember when LMAX first did in FX, there was some really innovation that was driving the offering. It wasn't the similar offering that other people had, and you stuck to. And I think that has led you to a certain level of success, and I think that has given you that kind of bold initiative to take on other things. So maybe you could just start us first, David, with what was the core problem and innovation that LMAX was set up to solve?
Interesting. Okay, so I think we sort of back in, I don't know, early 2010s, we set ourselves up as somewhat of a disruptor in foreign exchange. Now, bear in mind, a lot of people in foreign exchange didn't want to be disrupted. And in some ways, it was nothing new. I mean, there had been great exchanges in FX for 20, 30 years. It was our view that maybe they'd lost their way. They'd become a 2-speed, maybe even a 3-speed race in foreign exchange. So it was the have and have-nots. And actually, there's a tangent. We'll get into why it's very synergistic with Pyth, because that's what you're trying to do in terms of market data provision. And basically, it was all revolved around things like last look, and then sort of RFS, RFQ, and then central limit order books. So we just came along and said, look, we believe central limit order books are the way. We believe low latency, free access for all is the way. There was a lot of people that agreed with us. Funny enough, some of your former employers, right? So you look at the prop trading firms, they love central limit order books. They like public lit markets. That said, if there's a public lit market and then there's a private market, they have to be everywhere. Right? It's not like they can't say, okay, I'm only going to do public lit. We just decided there was room for growth in public lit markets in foreign exchange to try and do it the right way, to try and be the white knights of the industry. It wasn't easy. I sat down with my first ever panel. I sat beside the CEO of both the biggest exchanges, and they basically went, listen, you're not going to exist. We're going to squeeze you out of the market. We're going to price you out of the market. What you're doing is nothing new. So we just stuck to our guns. We went with one key principle, slowly persuaded it. I guess we started initially with the prop trading firms. Then we slowly moved into some of the more progressive banks. And then it was a case of, but like everything, you have to deliver valuable client flow. So we managed to persuade more, if you like, of the buy side, and starting with brokers, clients that needed better pricing. So we just said, look, it really is free market access. You access exchange pricing here. And then it was sort of flow begets flow, in that the liquidity providers, the non-banks and the banks said, okay, this flow's different. We'll keep pricing you. But it wasn't easy. And I think within that disruption concept, we actually did something also pretty unique back then. We built something called LMAX Disruptor, which was a message bus. So it's just a way of basically processing multi-threads at the same time, and if like speeding up market data provision and trading provision. It turns out now that we open sourced that. So we felt like we were giving back to the community. That was a big no-no in foreign exchange and capital markets. Like when we did that back in 2011, like, what the hell are you doing? And even my own board said, David, you give away the crown jewels. I'm like, well, not really. There's a lot more to building an exchange than just that disruptor. It turns out LMAX Disruptor now has a life of its own. It's open source. It's used in most banks, most low latency price providers or traders use that message bus. And we've gone on to open source a whole bunch of stuff. That just happens to be the most famous, but we outsourced Java test libraries, and we continue to do that. We did something this week, actually, in terms of a Solana library for one of our new DeFi initiatives. So yeah, I guess that's how we started life. I'm somewhat of a contrarian. Most guys in FX tend to be contrarians, and the best traders in foreign exchange are typically contrarians. So we built it out there, and I think, I'll stop in a minute, but then the segue into digital assets, into crypto in 2018, which was relatively early for TradFi, was just a natural extension for us. Okay, the rest of the status quo aren't moving into that space. There's a lot bigger exchanges than me that weren't moving into this space. So we said, okay, let's do something different. And again, let's see if we can disrupt them. Let's see if we can add something to the crypto and digital asset landscape. Then it turns out what we could add then was actually bringing TradFi technology, low latency technology, to a space that was very much web access, REST APIs, high latency protocols, whereas you had those prop trading firms wanting to trade on sort of similar institutional infrastructure, which they did in foreign exchange and all their other asset classes. So that was just an extension, I suppose, of our disruptive modus operandi.
Yeah, so you have this first principles thinking where FX is really traded through kind of these private pools. There's a lot of last look. There's a lot of prioritization for certain types of order flow, first and second class citizens. And you rethought this and you said, all right, let's try and do it. And you had the grit and the persistence to be able to pull it off. Where is LMAX Exchange today in terms of rankings and volumes? I think there's many exchanges that, certainly ECNs, that never made it through. I remember ones that never survived. You guys certainly have, and it seems like you're kind of thriving, and you've certainly changed the landscape of how people think about FX. But just give us a mark to market on that, and then we can kind of go into some of the more green shoots, innovative ones that you're working on.
Yeah, look, it's an ongoing process. So we're probably every single day top 3 in the top 3 FX exchanges out there. In certain days for certain customers, we might be top 1 or 2. We had probably one of our best months ever, around $1 trillion last month because of trade tariffs. Certainly some great days in the 60 billion marks. But look, it's a ongoing process. And what I would say, it doesn't really matter what your execution protocol is. You have to bring differentiated flow. It's hard to move incumbents from existing marketplaces, but that's my job. And that's my sales guy's job, is to convince people to move. Sometimes, ultimately, what's your flavor of Eurodollar? And it's like, David, listen, I'm getting the same bank, non-bank pricing in Eurodollar on ABC exchange as I am on LMAX, so I'm not moving. What else can you bring me? So the way we've done that, I made 2 acquisitions in the last 18 months, both in the United States of America. So we bought Curex initially. So that was access to real money. Previously, we had no relationship really with real money. So that means I could discuss with that client base, and that's differentiated flow for my liquidity providers. So not everyone else, not every other exchange has that. We then went and bought something called FX Hedge Pool, which moved us into the swap and forward space. We've got a lot of work to do, by the way. I want to build that sort of month-end fixed type swaps, but we need to move into the daily swap business, shorter period swaps. So there's a big thing to be won there. A lot of that is not electronic yet. So, and at the other end of it, I'm constantly expanding our distribution of, I guess you'd call them retail brokers. So I like to think that we are unique in that we cover every buy side, from the biggest asset managers in the world, and there's none that we miss in terms of size. They'll all know the LMAX brand now, all the way through to the smaller boutique investment firms and retail brokers who probably don't have client clearing relationships. So we've got this whole range of broker licenses across the globe that mean that we can clear for those brokers onto the exchange. So that's how we compete and try and differentiate ourselves. It's still work in progress. We still need to persuade people. We still need to do a better job tomorrow than we did yesterday or today. So that's that. And funny again, I'm doing some segues for you here. Having that digital asset provision, being active, I'm not going to hide from it, but we are the largest institutional cryptocurrency exchange today, as well as having 5 fiat exchanges. So all of a sudden now in 2025, with a new administration in the US, with impending regulation, then all of a sudden those asset managers, those banks, those non-banks, I mean, the non-banks have been engaged with us on crypto since 2018, but it's the asset managers of the banks are now engaged, and they're saying, David, how do we buy Bitcoin? How do we buy Ethereum with you? And the beauty of it is, with LMAX Group and with LMAX Digital, it's the same API, it's the same tech stack, it's everything they're familiar with. When we match in foreign exchange in 50 microseconds, we provide the same on the LMAX Digital exchange. So again, I think that's a differentiator that should help us win in foreign exchange and obviously digital assets. You know, when we set up in 2018, we were pretty careful that it was state and church. So digital was off to the side just in case. We didn't know what was going to happen with Bitcoin then, just in case the regulators sort of ran it out of town or the banks ran it out of town. But I think now you're seeing this obvious convergence of TradFi and digital assets. So yeah, it's work in progress. It still keeps me up at night, but also keeps me coming back to the office. So yeah, I think we're well placed to hopefully succeed when the two different asset classes converge.
Sure, yeah, makes a lot of sense. I mean, you've got the same institutional participants, now it's a new asset class, but you've kind of leapfrogged the just pure crypto exchanges who are, perhaps based in like Japan, and that's not a data center that everyone will have co-location possibilities in. So, that really borrows really well. I want to switch topics for a minute and start talking now a little bit about market data. And so obviously Pyth was designed to solve a specific problem in market data. And the reasons for its existence was there's this market data complex, right? And so there's market data generators, exchanges. And so we're going to hear a little bit about hopefully your experience as a market data generator. And then there's market data distributors like your FactSets, your Refinitives, now part of LSEG, or Bloomberg. And together, this is a huge industry, and the market data complex revenues have gone up tremendously. There's a lot of consultant reports around how that data is becoming unaffordable for a lot of people. You do hear it anecdotally for sure. And Pyth was a first principles based protocol where it's, how can we generate market data in a new source that is beneficial for all the participants, because not a lot of that revenue passes back to some of the people that contribute to it. But just set the stage for either with LMAX and your experience, or just your knowledge of being in markets for a real long time. How has market data changed in 20 or even 30 years as a industry? And where would you kind of benchmark it today?
Wow, big question. So look, first and foremost, what I'd say is sometimes you guys forget it as well, but we were the first exchange participant for market data on the Pyth Network, because theory alone, we believe in that Oracle principle. Now you have competition, you know that, and there'll be more competition, but that Oracle principle holds to this day. The price of everything, anytime, anywhere, all the time, that principle is fabulous. And we're still supporters of that today. At the time, I wanted to be first. My bigger competitors weren't in, so I wanted to be in. Now I'm happy from a Pyth supporter standpoint that they're all in. I was unique, I suppose, then in terms of foreign exchange. All the equity guys were coming, the FX guys necessarily weren't, fixed income weren't, options guys weren't, but now you guys have done a great job at growing it out. And I think now it's a case of, okay, let's survival of the fittest, may the best Oracle win. Yeah. And I think to this day, I think you're very well placed to do that. In terms of market data, look, you say, has it changed in 30, 40 years? I guess you're looking at my gray hair and realizing I've been dealing with it for that long. I go, you name checked one of the market data providers out there, the most successful in the world. And I remember having to be that young kid walking around a trading floor in Canary Wharf. And I can tell you exactly when it was, actually, early to mid 1990s. And typically it was time of budget. And the global head of fixed income went, go and cut our market data spend. And I was like, oh, how the hell do I do that? And I was like, well, if everyone's got a screen, a black and orange screen, right? Tell them they've got to share them. And I was like, oh, okay. So I just move the traders together and then I take one screen out. And by the way, everyone in the market did this. Every trading floor did this periodically, every year, every other year, to reduce it. Then the market data providers also got smarter in terms of how they charged you. mean, really smart things like if people got laid off, they let you have free market data for a year because you're still in the market. And then they knew when you came back, you'd sign up to the market data provision. And then the next bit you'd say was, okay, you pay per instrument. So that you go through and my job literally as a young man was to go around and say, hey, are you using the short sterling market data feed? And the trader would typically go, what are you talking about? And again, okay, that's a no. Hey, do you ever trade bobble? I'm talking to the FX desk. Do what? Okay, that's a no as well. Hey, do you trade commodities over on this desk? And they look at me like, no. And they'd usually call me a rude word and say, no, we do FX, dude. I was like, okay, so that's a no. So you go through and you cut this off. And then still every year people go, geez, how much are we spending on market data? The places you've worked for before Pyth, market data, huge. And everyone hates it, but it's a necessity. To make accurate pricing, you need to have accurate price. You need to have precision pricing and the quickest pricing available. One guy said it best. I won't name check him necessarily, but it's a listed PTF. He said, listen, if I price 40 exchanges and the 41st exchange opens up tomorrow, right, I need to plug in. And if they charge me for market data, I need to pay for it because I can't be missing a trade, right, or the biggest trade on the street. So it's essential. People have always complained forever. Big questions. Who owns it? The exchange? Well, the exchanges are making a lot of money out of selling market data today. So do they own it? Well, I guess they're saying they do. I think the liquidity providers feel it's their market data. So why aren't they getting paid? Again, back one of the principles of the Oracle is, hey, we can all share in the revenues here. And then you got the customers going, how much? But the reality is, if even in foreign exchange, and we all know, the main cable exchange is A, and the main euro exchange is B. You got to pay for both, right? And it's expensive. And because you're the main cable exchange and the main euro exchange, you can charge whatever the hell you want. And then you get to this have and have nots. We go back to the earlier question about disruption and having a level playing field for everyone. They say, well, I'll tell you what, I want to charge you this if you take the 5 milli feed, but if you want the 20 milli feed, it's a lot less. Okay, have and have nots. How do you price it? And then you've got back to, I know something you're looking at is, and I used to be there. I used to be in the middle office and back office. I need prices that are relatively accurate. And that probably means to not even to seconds, probably half a minute to within a minute, even within 15 minutes. But what you find is that everyone's paying, all these credit institutions are paying for real-time market data that they don't really need, right? There's very few people in the world need sub-millisecond prices, but that's the most expensive. A lot of people might be needing 100 millis, more people need it in 1 second blocks. And that's the way crypto's developed, but by the way. I mean, most people are sort of saying, yeah, 1 second's fair enough because of the speed of blockchains, etc. So I think there's a way of creating different classifications of market data. I'll be honest with you, we struggle with it a little bit at LMAX because we're quick, right? So we process 7 to 10 billion orders a day. The average round trip is 50 microseconds. We have a fire hose and a garden hose. The fire hose is bloody quick and a lot of data, and it overwhelms most people, right? Apart from maybe the PTFs. And then we have a garden hose that we might send out to brokers that we might send out in 50 or 100 milliseconds. But in between that, it's difficult. And that's before I talk to you about itch protocols and things like that, about disaggregated order books or aggregated order books. And then you get to where you're at, where I think the oracles are really useful, which is the people that like accuracy. And that's probably even in my world, deliverable FX houses, bureau de changes. They need a price which is relevant for a few seconds rather than a few microseconds. So look, we've stored, the other question is how you get market data out. I mean, we've stored every tick at LMAX Group since 2010. That's a huge amount of terabytes. And then people want to use it for back testing. It's all about the use of market data. So it's non-trivial. I'd say overall, users of market data would say today it's too expensive. I'd say overall, they'd say it's not fair. I think we'd like it to be fairer. We'd also like to make more money out of it, to be frank. But I think that's where you come in. That's where Pyth comes in, and the other oracles come in, and trying to create that level playing field, and the sort of fairness of market data access and provision.
Yeah, I mean, some of the numbers that I have here is in 2014 to today, so 10 years back, market data revenues at the exchanges and the distributors have gone up 600%. And you compare that with S&P 100 over 300%, or gold's 2.5, 250%. You know, it's performed quite well. It's been a good business, and I think you nailed it. Like it's one of the things that's like electricity. Without having access to it, you can't participate in the markets. And probably when electricity came out, you didn't have very sophisticated meterage, and you didn't have the ability to charge for usage. Now you certainly do. And it feels to me like that's part of the evolution. Pyth, when I think about Pyth as a oracle, there's two things that you're doing. One is you're doing the verification on chain. So you've got a set of validators who are basically confirming that there has been a consensus and that the data is now trustworthy. And so you can import that consensus onto, in the case of Pyth, over 100 different blockchains, and you can plug in various sets of data. With Pyth, what we've done, we've kind of combined both. We said, well, this data is so highly controlled, we're not going to be able to buy it from the people that we want to buy it from, because we're going to distribute it in an uncontrolled way. So we had to go rethink both components of it. And that's where we are today. And that's where the price of everything is. As the reason why the distribution business is so comprehensive, as you said, like the black and orange screens, is because the market data complex is so confusing. Every exchange is, for the most part, limited to the geography and the asset class that they have. And so if you actually wanted a comprehensive view of the equity market, you're talking about plugging into, in the US, 16, 17 different exchanges, because, if you're going to be taken seriously, you have to have them all. And then if you have different setups with each one of them, or there's a different sort of language you have to speak, then the distributor does a good job for you, right? They normalize that for you, and they can normalize it into various API keys. We think that at Pyth, you can normalize this without having the distribution. That's where I think the big game changer is you can go at asset class agnostic, you can go geography agnostic, and you can plug in enough of the contributors to the world, and you can have them provide their data. And it really gives you that sort of future vision of, okay, this is like a Spotify or a Netflix type of change. Like that's sure, that's how it should be, right? From first principles. And so when we're thinking about kind of the use cases that are on chain, I know you guys are more experienced than most with regards to doing stuff on chain. So as you said, you're the first contributor of data to Pyth. I can attest to that. And publishing, especially then, meant that you had to deal with Solana. It was going to Solana mainnet. Now you guys you've evolved on even just that. But where is your current mark to market on what the evolution of DeFi could look like? Where do you think there are areas where there are pockets of big opportunities, and where are there areas of resistance?
We are raging bulls about the transition that the technology in DeFi is going to bring to TradFi in the next decade, and why I think you're very well placed. Why I think the oracles are very well placed. Okay, so just to be, a little bit fair there, I'm saying, look, everyone is going to know the price of everything. So look, I was in Washington D.C. last week, and I met with all the major regulators as they were trying to pass the Genius Act. That will go through, by the way, in my opinion, in the next few weeks, having failed last week, and the market structure bill. I was asked by one of the agencies, David, how are you going to think about Apple BTC? So one bit of that was from a market structure perspective. I was like, okay, well, how are we going to construct the price for that? So guess what? This FX exchange, LMAX exchange, part of LMAX Group, has got to start thinking about, how am I going to price Apple Bitcoin? How am I going to price Apple everything? So we just believe everything's going to be tokenized, right? And make no mistake, that's going to be covered by regulation in the United States of America. So people need to be patient. People like the Pyth Network, the Pyth holders have to be patient. Once we get the framework established in the United States, what you would call digital assets or tokenized assets will be $20 to $30 trillion by the end of this decade, right? So 10x what crypto is today. And by the end of the following decade, so yeah, you're talking out to the 2040, I guess. But only 15 years from now, 80% of the world's assets will be tokenized and digitized, right? They'll trade 24/7. There'll be everything against everything. You'll need to know Apple against every currency in the world. You need to know Apple against every digital currency in the world. There may not be thousands of those digital currencies, by the way, but you'll need to know them. The first thing that's going to pass the United States will be a stablecoin bill, of course, like Genius. That suddenly makes all collateral fungible the world over, right? So that means you can be moving in and out of DeFi, in and out of crypto, in and out of TradFi 24/7. You're going to need to know what the price of everything is. So that's what the opportunity is. And I think, look, the smartest guys, the smartest prop trading firms can cope with this because they have the price of every instrument. You know that. So maybe they're not going to need the oracles tomorrow, right? But you're talking about 60 to 100 shops in the world that have that price where they can cross everything up, right? Back in the day, we were able to hedge, FTSE 100 stocks just basically by buying the index, buy and sell on the index, because we knew the correlations. Most people can't do that. Everyone out of the top 100 can't do that. So they're going to need a pricing source, and maybe initially it's going to be with the higher latency products. So I don't think foreign exchange is going to benefit that much initially, but the stable coins, first off, then the tokenized assets, which will be money market funds and the like, they're going to be traded on fixed income desks and FX desks, right? And they're going to need to know the price of everything. So they have two choices for you. I'm talking your own book here, Mike. Don't worry, pay me later. Not really, but it's if you think about it, they got two choices. They're going to have to go to the underlying exchanges and just pay even more, double or triple their market data spend, or they're going to have to engage with the oracles. They're going to have to engage with Pyth to do that. But we are, the reason we're happy to be involved with you guys, why we've built some technology internally at LMAX Group that segs between LMAX Exchange, LMAX Digital, and the other world, and allows non-custodial trading, so from the likes of MetaMask, is because we are absolutely positive that this will be the transition to capital markets that the internet and electronic trading was to FX. I mean, FX has doubled in terms of volume over the last decade, right? So this is going to be, if you like, it's the fifth industrial revolution, right? Normally you have to wait for 100 years. Here you've only got to wait for 30 or 40. So this is what's going to happen. That's the opportunity for the oracles. That's the opportunity for Pyth. That's the opportunity for market data providers. And I think everyone out there who engages with market data needs to start thinking about it, because the instruments that naturally cross our desk is going to explode, right? LMAX Exchange 2020 is not going to work, right, under the same structure in 2030. So we got to get with the program. I think you guys quote, 1,400, over 1,000 instruments. I need them.
Yeah.
I don't need them today, but I will need them when this explosion, this massive S-curve adoption happens. And believe you me, that will be led by the US this year.
Excellent. David, I don't think we could find a better topic to end it on. So I do want to thank you so much for coming at very first Market Minds. Yeah, thanks for being such a good partner and really kind of leading the charge with some of the innovation that you guys are spearheading over at LMAX, and congrats on all the success.
No, likewise. Look, I've enjoyed it. Thanks very much. We enjoyed partnering with Pyth. I wish you well on this new initiative as well. And let's touch base in 12 months and see how much of what we said was right.
All right. Thanks so much, David. Have a great day.
Thanks.